Good evening. This is Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting. As we speak, Treasury Consulting is a multinational headquartered group based out Singapore. We are a multinational hedge fund who takes positions in US, Europe, and Asia. But having said that, we are a proprietary hedge fund. By proprietary, I mean no third party. I repeat, no third party can invest capital in our fund. So we are taking prop positions, which we would continue to take. Our fund is continuously expanding. We started with Asia, we moved to Europe, we touched United States, and now with the immense blessing of the Lord Almighty in the sky, we are entering into the amongst most complicated product in finance, which is known as VIX. By VIX, I means volatility index. There are numerous volatility indexes we have in the world. So saying that VIX is the only volatility index, that is little demeaning to others. All volatility indexes of the globe have their own importance. We have volatility even on ETFs. So there are numerous volatility indexes we have on the globe. But unfortunately, people do not value this. That's another beautiful thing of the life. Rather, people do not knew this about. So, example, when you are taking a position in a US market, specifically talking Standard and Poor, you need to understand what the hell is VIX. You also need to understand that how VIX is shaping up and how it can impact your positions. That's very important. VIX is known as volatility gauge, which means the more volatility we have in the market, the higher the VIX is. There is one more senior addition to VIX, which is known as VVIX. And by the way, I am more inclined to VVIX, which is also known as VVX, rather than this. But I would be covering this later. VIX, if going up, then it means there is a sense of fear we have in the market. Example, in 2008, you would be surprised to know that VIX went to 64 when the whole credit market froze. No bank was lending to another bank. Everything was dismantled. Interbank was only a name, but no bank was helping each other. At that point of time, VIX reached 64. And there were inclination that VIX might be touching near to 80. Why I'm telling you? Because I was the part of the treasury function. So we were closely monitoring the VIX, but in 2008, my YouTube channel was not there, so I was not in a position to explain. VIX is quoted in 9 months. So example, we are in June 2022, then VIX is available till March 2023. When this June would close officially, we will enter July. Then it would come to April 2023, and this cycle would continue to move on. The big hedge funds, the big bank, institutional player, insurance companies, DFIs, they take positions in VIX. So let me give you a simplistic example. There are few paid websites, those who give the value of all 9 months of VIX contracts. They give you this. And suppose the last 3-month VIX levels are high as compared to the first 3 months. This is not a hard and fast rule, let it be honest. So if you are thinking this is hard and fast rule, then you're mistaken. This isn't hard and fast rule. So if first 3 months are lower while the last 3 months are higher, it means in our practical parlance, this is known as term structure of volatility. I never said interest rate. I said term structure of volatility. It means that in a later course of time, as the time would progress, the market is experiencing or envisaging a higher volatility as compared to the first 3 months. So if I put this in a very simplistic way, then the first 3 months market is expecting flat, while the last 3 months market is expecting boom. Like if I speak today, which is 28th June 2022, all 8 months are flat. 10 cents, 20 cents here, there, like this. That I call this as a fake signal. Because when Federal Reserve himself acknowledged that a recession is coming, then how can the consecutive 8 months, if I exclude the June future, it would be same. That's a very important point to understand. Another beautiful thing about the VIX is that many a times there is a overnight difference. So example, today the VIX closed at, today the Standard & Poor closed at whatever price. Tomorrow when we do the AM settlement, which is called SOQ, special opening quotation, there is a hell lot of difference between the closing price and the price which you get as a settlement. This is called the gap. So the traders in the VIX are very particular, and VIX is subject to manipulation. By the way, more videos would be coming. But having said that, VIX is one of the indicators how market is gauging how the volatility would be. This is Rahul Magan.